So next session is the statistical session. This session helps understand what information in the financial statements, notes, required supplementary information says about the government's overall conditions. So it includes financial trends, revenue capacities, debt capacities, demographic and economic information, operating information. As you can see from the sample CAFR here, the financial trends, it talks about government's overall financial performance and well-being over the past 10 years, and talks about the government's revenue sources, and also if the government has the ability to pay as the debt or obligation become due, and if a government has ability to issue additional debt in the future. And also talks about the environment within which the government's financial activity take place, and also how this information in the government's financial reports related to the services the government provides to its citizens. So far we have seen the overview organization of a comprehensive annual financial report and 3 major sessions of CAFR with introductory session that introduces the government entity and its financial statements, financial sessions that comprises all the financial statements based on different fund categories and reported as a whole, as well as supporting information to back these financial statements, and statistical session that provides historical trend over the past 10 years. Next, let's explore different fund categories before diving into each actual financial statements. There are 3 fund categories for which these financial statements are prepared. We have a governmental fund, proprietary fund, fiduciary funds. So Gatsby states proprietary funds are employed to report and activities financed primarily by revenues generated by the activity themselves. So these would be your municipal utilities, water, sewer, and these are the enterprise funds and internal service funds. Fiduciary funds contain resources held by a government, but they don't belong to the government, but belong to the individual or entities. So these are the trust funds and agency funds. The governmental funds account for everything else. So these are your police service, your fire, your social service, sanitary, and so on. So there are 5 types of governmental funds. The general fund is the government's basic operating fund. It accounts for everything not accounted in any other fund. Special revenue funds are intended to be used for reporting specific revenue sources. They are limited to being used for a particular purpose, for instance, a transportation aid. Debt service funds account for repayment of debt. Capital project funds account for construction, acquisition, rehabilitation of a capital assets such as buildings, equipment, and roads. Permanent funds account for resources that cannot be expended. Generally, these resources are invested and the government may only spend the earning often for a purpose specified by the provider of these resources. So now that we have talked about the fund categories for which these financial statements are prepared, let's take a look at each financial statement within a CAFR. So as we talked about earlier, the basic financial statements consist of 3 components: government-wide financial statements, fund financial statements, and notes to the financial statements. So the government-wide financial statements has 2 financial statements. It has statement of net position and statement of activities. These government-wide financial statements will help us as citizens assess government's finances and operations as a whole during the fiscal year reported, and help us understand the government's overall financial condition, including evaluating whether the government is able to pay the bill, and help us also see the service provided for us, the citizens, and costs associated with it, and see if a government has any short or long-term plan, if there's any investment strategy on investing in capital assets, building roads, bridges or other infrastructure growth and development. Now, the statement of a net position presents the same information as a balance sheet mostly. Traditionally, on the balance sheet, we have assets, liabilities, and a difference between the two, which is equity or net assets or fund balance. A few years ago, Gatsby Concept Statement Number 4 added 2 more reporting elements: deferred outflows of resources and deferred inflows of resources. According to Gatsby Concept Statement Number 4, deferred outflows of resources is a consumption of net assets by the government that is applicable to future reporting period. So example can be a deferred charges or a prepaid item. Deferred outflow of resources should be reported in a separate section following assets. Now, a deferred inflows of resources is an acquisition of net assets by the government that is applicable to a future reporting period. Now, example can be unavailable revenue or advanced collection. And then deferred inflows of resources should be reported in a separate section following the liabilities. Now, with this new change, Gatsby also changed the term from net assets to net position. So here is an example of a statement of a net position. You notice on the top header level, the financial statement presented in 2 reporting entity segments. We have the primary government and the component units. A component unit is an entity that is legally separated from the primary government, but is financially accountable by the primary government. Here we see there are 2 component units. So we have the Urban Renewal Agency and the Cable Television. We would be able to find more information about the component units of a government in the notes to the financial statements. So as you can see, the government-wide statement organizes information by whether it relates to governmental activities or a business type of activities. Generally, the governmental activities are those accounted for in the governmental fund and internal service fund. Internal service fund is one of the 2 types of proprietary funds we talked about. The business type of activities are typically synonymous with the enterprise fund, so there's the other type of proprietary fund. Trust and agency funds are not included in the government-wide financial statements because the resources they accounted for are being held in a fiduciary capacity by the government and they don't belong to the government. And the governmental and business type activities combine to represent the total primary government column. So on the left-hand side, you would also see our assets, liabilities, deferred inflows of resources as we talked about earlier. You also notice on the net position section, net position is divided into 3 different components. So we have our net investment in capital assets. So these are your capital assets net of accumulated depreciation, reduced by any outstanding balances of any bonds or notes or other borrowing funds. The second one is the restricted component of a net position. These are the restricted assets reduced by liabilities and deferred inflows of resources related to these assets. And the last one is unrestricted component of net position, and these are account for everything else not belong to the previous 2 categories. So here is an example of a net statement of activities, and I know maybe it's harder to see, but you can download the sample CAFR, and it's on page 31. The statement of activities is similar to the profit and loss a statement used by a for-profit business. However, the format of the statement of activities is very, very different. The statement of activities starts from the left to the right on the top and the downward at the bottom. The statement of activities also compares the cost of a government's program with the revenue it generated from that program. So we can also see how the government financed the difference in the event the programs cost more than the revenue they generate. So on the left-hand side here, you can see a list of functions or programs the government provide, starting from the primary government, governmental activities, and business type of activities, followed by a section for the component units. So next on the top, you will see the expenses or costs for each program, and then shows the revenue for each program it generates. So each program revenue is linked directly to the program listed on the left. So one type of program revenue is charges for services. So these can be your garbage collection or your museum admissions, things like that. So another type of revenue sources are grants and contributions. So these can be funded by the other government organizations. As you can see here on the right, here's the net revenue and expenses. As you can see, most of these program revenues does not cover the cost, except maybe for water and for cable TV. So down at the bottom, you can see the government chooses to finance these functions and programs with different taxes or grant contribution revenues. So of course, more detail of these programs or functions can be found in the notes to the financial statements. At the bottom of the statements, it shows the changes in net position and the beginning and ending balance. So far we have seen two different types of financial statement within the government-wide financial statements: statement of net position, statement of activities. And how each financial statement is presented. Next, let's move on to the fund financial statements. Recall earlier we talked about fund financial statements consist of a series of statements reporting information on three different fund categories. So we have a governmental funds, proprietary funds, fiduciary funds. So let's start with the governmental fund financial statements. In this set of financial statements, we will see a balance sheet, statement of revenues, expenditures, and changes in fund balance, statement of revenue, expenditures, changes in fund balance, budget versus actual. So here is an example of a balance sheet. As you can see, it is reporting the assets, liabilities, deferred inflows of resources, and fund balance. Notice across the top here, we have several governmental funds. We have the general funds, capital project funds, debt service funds, and the non-major fund columns. So let's talk about major and non-major funds. According to Gatsby, the general fund is always a major fund and is always shown separately in the financial statement. And funds that cross certain benchmarks are required to be reported separately. And governments may show smaller governmental funds separately if these funds are considered important to the government or the readers of the financial statements. So what this means is that if there is a specific formula to determine if the fund is a major fund or non-major fund, and if the fund is considered important to the government, then it is reported separately as well. And the remaining non-major funds are aggregated in a single column on the face of the financial statements. And remember from our previous notes, the detail of these non-major funds are reported in the combining statements or schedules after the required supplementary information session. So at the bottom of the statements is the fund balance section. And notice there are actually 5 different categories of a fund balance. So we have the non-expendable, restricted, committed, assigned, unassigned. According to Gatsby number 54, non-spendable fund balance categories, so these are the amounts that cannot be spent, for instance, your inventory and your prepaid items. The restricted fund balance categories includes amounts that can be spent only for a specific purpose stipulated by constituents. external resource provider or through enabling legislation. The committed fund balance classification includes amounts that can be used only for specific purpose determined by a formal action of the government's highest level of decision-making authority. And the amount in the assigned fund balance, these are to be used by the government for specific purpose but do not meet the criteria to be classified as restricted or committed. An assigned fund balance is the residual classification for the government's fund. Now here is an example of the reconciliation of a fund balance of the governmental fund to the statement of net position. As we talked about earlier, because the governmental fund reports using current financial resources measurement focus and modified accrual accounting, and the statement of net position reports using economic measurement focus and accrual accounting. So we need to reconcile these two different statements. The reconciliation items are generally two kinds. The first one is those that explains the difference in the scope of activity covered. For instance, governmental activity may include internal service fund in addition to the government fund. And the second one would be to explain the differences in the accounting basis. For instance, the capital assets and long-term liability, they are presented in the government-wide financial statement, but they are not presented in the governmental fund financial statements. So all these items need to be reconciled. So here is an example of a statement of revenues, expenditures, and changes in fund balance for governmental funds. And notice that format of a column presentation here is the same as the balance sheet we have seen earlier, with a governmental fund on the top and non-major funds reported as one column here. On the left-hand side here, we report different sources, revenues, and also different type of costs associated with these funds. However, revenues and expenditures are not the only inflows and outflows of resources reported in this statement. So there is also other financing sources and uses. So these include the cash received when bonds issued, as well as any transfers between funds. So apart from the fact that these resources are not revenues and expenditures, the purpose is really to help us users of the financial statements and citizens understand what other financing sources and uses the government chooses to fund the basic operation of the government. The bottom here is the net change of fund balance, revenue minus expenditures, plus and minus other financing sources and uses. The amount is added to the fund balance as of the beginning of fiscal year and the ending balance at the end of fiscal year. And these numbers should match the total fund balance reported in the balance sheet. Now, like the balance sheet, this statement also has a reconciliation. Again, the reconciliation items typically relating to the differences in scope of activities or accounting basis. Here is the statement of revenues, expenditures, and changes in the fund balance, budget, and actuals for the general funds. Governments are required to prepare a budgetary comparison schedule that tracks the progress over the course of fiscal year of the general fund or each major special revenue funds for which government has legally adopted a budget. So as you can see on the top here, we have our budgeted amount, original budget, and the final adopted budget, and compare with the actual expenditure, and then to see the variance with the final budget. So the government has option to prepare the budgetary comparison as part of the financial statements here, or they can present it as a schedule following the notes. So far we have seen three different financial statements for the governmental funds that presents the assets, liabilities, inflows and outflows of resources, different classification of fund balance, budget to actual statements, as well as reconciliation of the government fund financial statements to government-wide financial statements.